Welcome to Profiletraders. This is Reza and you're listening to my market analysis for January 31st. Before I go on telling you what I think, I would like you to know a couple of things. Number one, this week we are expecting a couple of big earnings, Apple, Amazon, which definitely will have an impact on the markets. And two, and most importantly, tomorrow is going to be an FOMC meeting and we will know if the Federal Reserve will hike the rates or if we leave the rates unchanged. In both cases, that also will have a significant impact on the market tomorrow. With that said, last time we looked at the daily chart, we were within this consolidation, and I told you because there was very little sign of selling in here that most likely we would get an attempt to break the market to the upside. We got our push attempt and it stopped at 2300. Now why did it stop there is not at all hard to understand. Market has a tendency to repeat itself. So if I take the length of a move that went on from here to here and I duplicate the length of this top to this low and I project it from this low on, I bet you that if you calculate, you are going to see to get more or less the same amount that we went up to this point from this low here to this high here. And then obviously we have seen a tremendous run to the upside. Earnings season is coming to an end and it is not at all uncommon to see a little bit of profit taking place. So if we want to go up now, we have to consider that due to the fact that we opened with a gap down 2 days ago, market could go up and fill in this gap, and that gap will be filled right around 2289. So that is the upside objective if we if we want to gain and continue this push to the upside. That's where our gap will be filled, and that is exactly the close of this session here where I'm going to put a line on it, and the open that took place in here at 2281. So that was a gap down between 2289.75 to 2281, and on a very strong market like that, it's not unusual to see market to go and fill in gaps that are left open from before. And this 2264 did hold twice now, very notoriously, and if you wanted to know why, that is because the whole consolidation here has generated a tremendous amount of volume. And this amount of volume generated, which you can see it in a profile chart right there, has provided significant support. That is why it's been very, very tough for the sellers to break the 2264 level. Now, based on today's action, obviously the buyers are ahead because we are closing at the very high of the session, but the main key area is yesterday's high, because overall this session is contained into the yesterday session, and until the previous day session high is not broken, we are still contained into the last day's session, and it doesn't mean that the buyers are really forging ahead significantly. But because we have these single letters up here above 2277, if we do close or break that I will be favor more of an upside move to first 2283, which is the blue line up there, and then going for a close of the gap at 2289, 2290 level. And if we come down here, the first level of support, minor level of support, will be 2267, and then most significantly and most notoriously 2264 to 2262 will be the area of support that we need to break. So keep in mind again, earnings due out, Amazon, Apple, and most importantly, Federal Reserve meeting tomorrow. Now if we look at the price of crude, we see that crude came down, but as we were coming down, these profiles were kind of short in length and also very developed sideways. That was indication that there was very little sell pressure coming down, and on the way down it was getting accumulated because of these developments sideways that it's very visible within these profile bulged areas. And then finally today we got a very aggressive run to the upside, did hit 53.5 and failed back down, and now we are at around 52.86. That one also will be subject to tomorrow's oil reserve numbers, and depending on what the reserves will do, it will make crude fluctuate quite aggressively. And also part of this bounce to the upside was a very nasty sell-off that we saw on the US dollar against euro. Euro rallied quite aggressively, and usually when the dollar weakens and euro goes up like that and the dollar comes down, it usually helps the price of crude. So definitely now the main area of resistance will be at 53.50 to 53.75. That should be the resistance sell zone. Sorry about this little update on the screen, it's not in my control. And on the way down 52, and on the way down 52.40 will be the first resist or support at the blue line down there, and then past that 52.10. So market is a bit on a stage of undecided state here, and depending on tomorrow's rate decision, oil reserve numbers, I'm expecting a very, very wide move. Which way will it be? It's hard to tell from this current chart because we are a little bit all over the place, going back and forth without clear-cut direction. Thank you for listening. This was Reza with Profiletraders. If you are interested to learn market profile, check my website. You can get all the 5 courses plus 1 year to my trading room for $550, 30 days money back guaranteed. To the next time, and good luck for tomorrow.